All right, so BMO's latest quarterly earnings just dropped, and honestly, when you look past the headline numbers, there's a really fascinating story here. It's all about a focused turnaround, a rebuild that's seriously starting to get moving. Okay, let's dive right in and break down what's really driving their performance. The very first thing you need to see is this number, plus 22%. That is a 22% jump in adjusted earnings per share year over year. I mean, that's a powerful result in any economy, let alone this one, and it just sets the stage for a super strong quarter. So, the big question is, how did they get there? Well, CEO Darrell White pretty much gave us the main theme right away. He didn't just cheer for the growth, he framed it as making progress on a very specific goal, the ROE rebuild objective. You're going to want to keep that phrase in your head because it's pretty much the key to understanding BMO's entire strategy right now. To get the full picture, we're going to walk through this in 5 key parts. We'll start with the record-setting numbers, then we'll decode that ROE rebuild mission. After that, we'll see which parts of the bank were the real star players, check out how they're handling the tricky economy, and finally, take a look at what's next. First up, let's check out the scoreboard, and you'll see pretty quickly that by a few different measures, this was a really standout quarter for BMO. Let's get into the specifics. Now, what's so interesting here is that the strength is really spread out. It's not just that 22% EPS growth. Adjusted net income hit $2.4 billion, up 21%. And their pre-provision pre-tax earnings, which is just a great way to see how profitable the core of the bank is, jumped 13% to $4 billion. And that CET1 ratio of 13.5%, well, think of that as their financial safety cushion, and it is rock solid. That gives them a ton of flexibility. So how are they putting up numbers like this? It all circles back to that core mission we just talked about. This isn't just happening by chance, you know? It's the result of a very deliberate, very clear game plan. Before we get any further, let's just quickly talk about what that mission is all about, return on equity, or ROE. Put simply, it's a number that tells you how well a company is using its shareholders' money to make a profit. The higher the ROE, the more bang you're getting for your buck. And BMO is absolutely laser-focused on cranking this number up. And just in case there was any doubt about how important this is, the CEO made it crystal clear. Talking about this ROE rebuild, he said, "This remains our #1 imperative." That's not just some corporate buzzword. That's him telling everyone this is the bank's absolute top priority. So how are they actually doing it? Well, their plan is basically a 4-pronged attack. First, they're pushing for more profitability in their U.S. banking arm. That's a huge engine for growth. Second, they're working to get their provision for credit losses. That's the money they set aside for loans that might go bad, back to normal. Super important in this economy. Third, they're making sure revenue is growing faster than their costs. And fourth, they're being really smart with their money, putting it into high-return areas and giving the rest back to shareholders. But you know, a strategy is only as good as the team executing it. So let's see how this plan is actually playing out across the different parts of the bank. Who were the star players this quarter? You know, the big takeaway here is that it wasn't just one division carrying the whole team. Nope. From personal and commercial banking in both Canada and the U.S., all the way to wealth management and capital markets, every single part of the bank delivered growth. That's the sign of a really healthy business firing on all cylinders. And if we zoom in a bit, you see some really impressive stuff. In their Canadian banking division, customer growth was nearly double the industry average. The U.S. side showed awesome profit growth and kept a tight leash on expenses. Wealth management, they had a record quarter for revenue and even announced a big acquisition. And capital markets had a fantastic quarter, getting lead roles on more major deals. Seriously, every engine was adding power. Now, of course, no bank exists in a bubble. So what's the economic weather looking like out there? And how is BMO getting ready for any potential storms? The CEO basically painted a picture of 2 different climates. He described Canada as going through a period of, quote, modest growth. The U.S. economy, on the other hand, is showing more resilience, mostly thanks to a strong job market and people continuing to spend. This 2-speed outlook means they need a really nimble strategy for their 2 biggest markets. And of course, hanging over all of this are the bigger global headwinds. The bank is very aware that things like geopolitical issues and trade risks are still out there, creating a pretty uncertain backdrop that they have to navigate really carefully. So how do you deal with all that uncertainty? You invest in the future. BMO is pushing hard on its digital-first strategy, and we're not just talking about a better mobile app here. They're rolling out sophisticated AI tools like their Lumi assistant for their employees and winning awards for their payment tech. This is how they plan to stay ahead, no matter which way the economic winds start to blow. Okay, so after a record-setting quarter, with a clear strategy humming along, what does the road ahead look like? Let's pull this all together. If you remember just 4 things from all this, make it these. First, the results were undeniably strong, led by that massive 22% earnings growth. Second, their ROE rebuild mission isn't just a catchphrase. It's a real plan that's delivering real results. Third, their strength comes from everywhere. Every part of the bank is contributing. And finally, their financial foundation is incredibly solid, which gives them the freedom to invest, to grow, and to reward their shareholders. So what this all really comes down to is this. BMO has shown it has serious momentum, a sharp strategy, and a rock-solid financial position. They've put themselves in a fantastic spot to control their own destiny. The question that's left, and the one we'll all be watching in the coming months, is whether that impressive momentum will be enough to navigate the undeniable economic headwinds that are definitely on the horizon.